and we are live on Zoom. What's going on, Zoom? What's up, everybody? Please let me know in chat that you can see me and hear me. Yeah, come through. Please let me know that you can see me and hear me in chat. Again, if you are on Instagram, you want to come see our slides, please come to buybackablock.com. All right, what's good? What's good? Courtney, Carla, Ty, Cynthia, Fanny, Matthew. Yeah. What's good, y'all? Hope you're well. Thank you for being here tonight. Excited to have you. Me and my brother Anthony Kimball right here. Yeah, IG. All right, cool. So welcome. So grateful that you're here. We got a lot to share with you. I see some familiar names and faces. Some of y'all from the multifamily movement, some of y'all from the How to Buy Back the Block Facebook group. In fact, for those of you who are not in the How to Buy the Block Facebook group, I'm gonna howtobuytheblock.com. I'm typing that in right now. This is where Anthony and I are giving a free game on how to get into real estate development. We have a growing group there, over 1,300 members. So I see some familiar names and faces from there. I see folks from the multifamily movement. Where my multifamily movement folks at? Y'all here? Y'all in the building? That is where I teach people how to buy multifamily real estate. Whoops. That's where I teach people how to buy multifamily real estate. Hold on, the camera just went out. 1 second. Start video. All right, we back. All right, good. I see y'all. Good. All right, so we got hundreds of people here right now. Again, if you're on Instagram, go to buybackablock.com to join us in Zoom. On Zoom, you'll be able to see the slides. In fact, I'm going to share my deck right now. We're going to push through the slides as quickly as possible through the presentation, and we want to leave as much time for Q&A as possible. Again, you are here because you are interested in buying back the block here in Baton Rouge for the Buy Back Baton Rouge Fund, and I'm excited to have you here. All right. So real quick, I'm gonna play this video. Of Anthony and I just as an introduction and allow a few more people to come through, and then we are going to get started. So let me share my screen with y'all. Share. Please confirm that you can see my screen. Please confirm that you can see my screen. Oh, why is it so blurry? All right. You can see my screen? Cool. So I'm gonna play this video for y'all. We'll see how the audio goes, and then we're gonna get started.
We just purchased the building.
Football was big for you. It's been a big part of your life. Now you actually own something the size of a football field.
800 square foot, house, inner city. That was my first purchase. So now, this 27.5 thousand square feet, acre of land. And, have to really sit and plan out and, really figure out what these developments can be. For me, it was always about impact. How can I build communities that, really accommodate our people? So, housing is just one part. You got to be able to, diversify. Parking here. I'm trying to figure out if you make the ends down that individual apartment, and this is the entrance. So the rest of the apartment, I do think you can do something where you walk in here and you're in hallway. Nearly an acre of land right there. We really have some real game planning to sit down and do. Bought the building at a great cost basis, $1.2 million. I want to say, I forgot what the square. I think it might have been $30-40 a square foot. I get this and Julia mixed up. Paid about $8 a square foot for the dirt. So really good prices. 900 divided by 2. This is 4,800 square feet over here. This building. 48. So if we did, let's say units, for the night size, one bedroom, let's say 775. My passion is truly, make an impact and coming back to a place where I can truly have a seat at the table. That's 6.2, which we probably could get 6 because that 0.29 is going to be your hallway. So potentially, that's what I think we can get 6 for my tribe. The people around me is these resources and bring it back to a community like this, and people that's within my tribe, my family, my friends. The people I care about. That's what's important to me.
So we draw that on paper and then
Yeah, Ken told me he think he can get these clients in 6 weeks.
Cool. So just wanted to show you a preview of one of the properties that we have acquired here in the Eddie Robinson Senior Historic District in Baton Rouge, Louisiana, where Anthony and Tevin are from. I'm originally from Oakland, California, and we'll get into our backgrounds and how we met in just a second. Again, if you're joining us on Instagram, welcome. Go to buybackablock.com to join us here on Zoom so that you can see the slides. So let's get into it, y'all. It's about 300 of us here, and 300 is a very important number to me. For those of you in the multifamily movement, I'm trying to free at least 300 people through multifamily real estate, and this is one of the ways that I'm doing it. So welcome everybody to the Buyback Baton Rouge Fund Investor Call. We thank you for being here this evening. I'm excited to have you. Anthony and I are going to take you through what this fund is really all about, our purpose, our mission, and how we actually create value for our investors. Real quick, we just have a disclaimer that the information contained in this presentation is considered confidential and solely for individuals who it's been delivered. We have been approved by the SEC to do a crowdfund, and so we want every investor that we have to be educated. We don't want anybody to jump in without being aware of what they're jumping into. So this is why we are putting this content out here for you tonight. What we want to do is we're going to start out with our team. We're going to start out with our team and explain who we are and how we got into real estate. Then we're going to go into why we believe real estate is the #1 asset that we all need to have in our last names. Then we're going to go more specifically into our business model in terms of real estate development. There's several different business models when it comes to real estate. And then we're going to share how you can get involved if you feel inclined. So I'll just start off with myself real quick. I'm originally from Oakland, California, and I went to UCLA for undergrad, where I did business economics. And then I worked for 2 years before going to Stanford to get my MBA. And little did we know, Anthony and I were both at Stanford at the same time. He was an undergrad. He was the running back on the football team. I was in the business school. So even though Stanford is pretty small and it's not that many Black folks at Stanford, we didn't cross paths at that time. We actually met about 9 months ago here in New Orleans at a real estate event. Anthony, what took you to Stanford from Baton Rouge, man?
Oh man, it was a great place to go to school, undergrad wise, like Jordan said, I'm from Baton Rouge, went out to Stanford, played football, graduated from there, worked for Accenture, did that a couple years, went into the sports world, but the whole time, investing and finding different things to, be involved in and put my money into and have my money work for me was important. So I bought my first property, I think 24, 25, single family house on the left, in a place called Bird Station, inner city community in Baton Rouge. Paid like 11 grand for it, put like 15, 20 grand into it, rented it, and then eventually sold the property. And I bought the property, because my mom was buying a property across the street. My parents were one of the people that got me into real estate and investing in real estate. So, that's where my real estate journey, where it started for me.
Yeah, so my first property is actually in Brooklyn. It's a 3-family home that I bought there in 2013. That home got me to rent and mortgage freedom, meaning that since I acquired that property, I've not paid a housing expense for the past 7 years of my life. And as you all know, I built out my portfolio to 10 properties and 30 doors. Since then, 8 of them are here in New Orleans. 1 is in Brooklyn and 1 is in Oakland. Anthony has a similar size personal portfolio, but we wanted to create opportunities for other folks to move. And we know that there are some blockages that don't allow people to get into multifamily real estate in the way that they desire, whether that's bad credit, whether that's low income, whether that's not enough savings, whatever it is. And so we wanted to create an opportunity. Can everybody, I see a couple people saying they can't hear or see the screen in full. If you can hear me and see us well, please let us know. The slide, actually with the slides, I don't think you can see us with the slides, but you can hear us. All right, so if you can't hear us, majority of people can, so you may want to log out and log back in, restart your computer or whatnot. Thank you for letting us know though, okay? So let's keep it pushing. Anthony and I, we may be the face of this team in this particular fund, but we are not doing this alone. Some of you have been in the How to Buy Back the Block group, and you see our team meetings look like the Last Supper full of Black folk who are working together to make this happen. Anthony is focused on the acquisition and partnership side in terms of building relationships with owners in the neighborhood and acquiring the properties and forming all kinds of partnerships. His relationships here in Baton Rouge run deep. He is from here. You won't believe who he got on speed dial. That's really powerful. And I've been in the car with him to witness that. Our other brother who is not here tonight is Tevin Wade. He is from Scotlandville here in Baton Rouge, and he runs the construction side of the business, and he's just great at what he does. He built a huge team. How many subs?
I mean, I can't even think of the number of subs and, people working for those subs, it's definitely 50 plus. As far as, construction team, and it's, that's continuing to grow.
Yeah. And then for me, my role is the fundraising and marketing, telling this story and this narrative about what's possible here in the Eddie Robinson Senior Historic District and how we develop that. And so I'm one of the main reasons that you are here today, just through the outreach and the storytelling, through the content development. We want to take you on this journey with us. We don't just want you to invest blindly. We want to educate you along the way. And that's my responsibility for capturing this story while him and Tevin are focused on the frontline work. I'm here making sure that story gets captured and translated to you so that you can learn and become a sophisticated investor. We believe that this is just a model and a template that we can carry over to many communities all throughout, especially the South. And some of you here tonight will eventually be in the same position that we are in, raising a fund to be able to do this wherever you are in the country. So this is really important to us to educate as we also empower at the same time. Individually, we're not here alone either. We have a lot of key partnerships. It's not just 3 Black dudes out here winging it. Like, this is official business, y'all. We have partners on the legal, op zone, and historical tax credit side, from GainVest to the Roth Law Firm. We just had a meeting with them today. Urban Vantage, who helps us with historic tax credits. Lenders, we have strong relationships with People's Bank and Bancorp South here in New Orleans. Like, we pull up, no ID required. They're not giving us money just like that, but they know us by first name. Fannie Mae, Freddie Mac, multifamily, which are the long-term mortgages that we'll eventually refinance into. And then we have strong relationships on the property management and general contractor side with Core Management and Smith & Brown Management and Consultants. So this is official organizational structure happening here, and this is what you are investing in. What I learned when I was at Stanford is that you invest in the team before the idea. You can have the greatest idea, but if the team isn't strong, and the greatest idea won't get executed. And the team that we have here is absolutely solid, and it is strengthening every day. We're in the process of looking for a full-time accountant and a full-time architect. So if you have anybody out in the Baton Rouge area who it has those particular skill sets, please DM me or email us to let us know, because we are hiring for those 2 positions as we get ready for this rapid growth that we are all about to experience. So with that, we're going to get into why real estate. Some of you are brand new to real estate. Type renter if you're a renter, type single family if you're a single family buyer, and type multifamily if you have at least 1 multifamily property. In chat, let us know. Renter, single family, multi, single, renter. All right, this is really important for us to know, because it really explains your awareness and in-depth analysis of real estate and your belief in it. And so we want to know who we're speaking to so that we can meet you where you are. There we go, a soon to be owner. I like that. Cool. Beautiful. Thanks for letting us know. All right. So what we're going to do is we're going to start off with a little bit of our portfolios and the development that we've done thus far. I'll let Anthony talk about his recent work in the Bywater.
So this is the project in the Bywater in New Orleans, historic bakery that we purchased, and we turned it to 6 residential units, studios, and 2 bedrooms. We ended up purchasing 3 properties across the street from there, one being an old laundromat that we developed into 6 units. And one being a single family house. I ended up buying up one of the lots from the business to develop a property of my own. You can go to the next slide.
Yes, sir.
So Electric Depot. So Electric Depot is a project my company's one of a partner on in Baton Rouge. It's where business Red Stick Socials at. So Electric Depot, public-private development with Build Baton Rouge, which is our redevelopment authority in Baton Rouge. So this project really was a catalyst project for this area that we're working in. in Baton Rouge, and a project that really needed to happen. So part is 16 residential units, 55,000 in commercial with this first phase, and the second phase will be 100 residential units. But you know, with the type of work we're doing in communities that's transitioning, catalyst projects such as Electric Depot and some of the other projects we're part of are very important. We're moving development along in these areas.
Yeah, and on the map, we'll show you where Electric Depot is positioned in the community and in relationship to the properties that we've already acquired. But before we get to that, we want to just make our case for real estate and why we believe real estate is the most powerful asset, especially in this volatile economy. How many of you have taken hits on your 401k in the past 3 months? Let me know in chat. How many of you taken hits on your 401k in the past 3 months? It's going to be a pretty unanimous vote out here. And the thing about stock market, while it can be a wealth builder, you absolutely have no control. You can't call up Tim Cook at Apple the way Warren Buffett could. If Tim Cook did something that Warren Buffett didn't like, Warren Buffett could call him in 2 seconds, right? We can't do that when we're investing in stocks in that way. So stocks, we don't have that much control. And in many ways, it's a crapshoot. Yeah, you could say, oh, well, I read the prospectus, I've done all this research, etc. It's very hard to have perfect information when it comes to stocks, and a lot of it is just a gamble. And so we don't want to gamble your hard-earned money. We actually want to make sure that you have a predictable return that is going to come to you. So oftentimes, especially for those of you who are renters, or even single-family buyers, we've been taught that cash is king, but it's absolutely incorrect. Cash is not king. Cash is actually pawn. Cash is the lowest yielding asset in the entire world. I'm going to repeat that. Cash is the lowest yielding asset in the entire world. Why? Because it only yields 0.03% in your Bank of America savings account. So you've been taught to chase money and chase paper for a long, long time, but once the dollar came off the gold standard, it became valueless. I could put the word money on a Post-it note and it would be, that's what money is worth. You know, it actually costs more to produce a penny than the penny is actually worth. Like this, it's backwards. And so we put our values into the wrong things. So if, as Nipsey said, we playing chess, not checkers, right? And so when you look at the way wealth actually works, queens are the asset. Queens are the asset, right? And then queens give birth to kings, which is cash flow. And then kings lead to pawns, which are cash. And when you're playing chess, you will happily sacrifice all the cash that you have to, or pawns that you have, to acquire another queen. So this is the name of the game. And once you actually understand this and you start not only understand it, but you start to move your money based on this, you're going to start to see transformation occur for you. Just real quick, just to verify, this is what Bank of America's savings account rate is at 0.03%. And so that's what your money is doing. And that's absolutely, that's basically your money being lazy. Our responsibility when we get cash in our pockets, you, myself, Anthony, etc., is we are supposed to be good stewards of money and we're supposed to multiply it. It says, be ye fruitful and multiply. And so as with that being the call, we cannot just put our money in a bank account because you cannot save your way to wealth. Now, for those of you who are heavily invested in the stock market, or taking some hits with your 401ks, et cetera, or trying to pick stocks yourself, this is the actual return on the S&P 500 over the past 20 years. I've done the calculations. This is the exact math. You can go verify it for yourself. A lot of people believe that the stock market grows by 10% every single year. And this is just put your money in the stock market. It'll grow by the time you retire. Well, this is the actual growth rate of the stock market over the past 20 years, 4.23%. That's the average growth rate of the stock market. These are the exact numbers right in front of you right here. 4.23%, that's decent. That's way better than 0.03% in your savings account, but that's still very low in comparison to the asset class that we are going to introduce you to today. You said you can't see my screen? You can't see my screen? All right. Most people, few people can't. Most people can. All right. Thanks for letting us know. If you can't see it, please log out and try to log back in. A majority of people, actually about 95% of people say they can't see it. All right, but thank you for letting us know. All right, cool. So your bank account, savings account is yielding 0.03%. The S&P 500, which is a major stock market index, yield about 4.23% over the past 20 years on average. And the asset class that we're introducing you to with this particular fund is 15%. That is our target IRR, or our internal rate of return that we are targeting, and that our pro formas are showing based on the acquisitions that we've made and the analysis that we've done for the properties that we've acquired. So the difference between investing $1,000 at 0.03%, basically your bank is giving you 30 cents annually on that $1,000. S&P 500, the bank would be giving you $42 over the course of a year. And we are trying to at least triple that with 150, which would be a 15% IRR, or internal rate of return. Okay, so just want you to be clear about what you're stepping into, and this is our focus. Now, when it comes to creating queens, there's many different types of queens that are out there, but the queen that we are focused on is actually real estate. Real estate is the queen that produces cash flow, which produces cash for you, which then you can continue to reinvest over and over and over again. Our goal is to flip money, to multiply over and over and over again. And this has been the most effective way that Anthony and I have found, the most predictable, the safest, and with the most control. And we're going to show you, as we step into our business model, how we actually make real estate work. We have a unique business model. This is not the traditional real estate model that you might see online. There are some strategic initiatives that we use to make sure that our investors get the returns that we predict. Okay, so Anthony's going to take us through our business model right now.
So yeah, a lot of the properties the space we typically operate in is small multifamily properties that are historic. One being, we like working in old buildings, but with historic tax credits, we look at this as a way to mitigate the risk on the project. What is, very common about our strategy, it is the burst strategy. We're going to buy something, a lot of times majority cash, renovate it, rent it out, then go to the bank and refi it, and then kind of really repeat the cycle with that cash that we're bringing back in. The only thing that we really add to this in our business model, next slide, is that we use historic tax credits. So this is, typically how our project looks. We acquire, a project, you try to get it under market value. Then this is where a guy like Tevin and his team come in. They come in and execute our construction. Typically, this construction loan is provided by a local community bank, small bank or something like that. From there, we receive historic tax credits on the construction costs from our project. So we look to monetize those tax credits. So that's real equity actually coming back into this deal. From there, we rent the property out and stabilize it. And then from there, we go and refi the property, either working with a community bank or a lender like Fannie or Freddie, which has a small multifamily product that they refi these small multifamily deals anywhere from $750K to $6 million in loan size. So that's typically what a life of a project. Go to the next slide. Yep. This is a actual project that we've already raised money for. Project that we're doing on Julia Street. Bought the project majority cash, under market value, acquired at $300K. The cost for construction and soft costs on this project, $977K. So with that, we get 20% in state and 20% in federal tax credits. From there, we monetize those tax credits. So that's real equity that's coming into this deal, usually during construction or usually during the first year of this deal by monetizing those tax credits. From there, we rent out this deal. So now we have operational capital coming in from rent. So that's, the second way that money is returned to investors. And once this deal is stabilized, we go back to Fannie and Freddie, and then we refi this deal, which also brings some cash back into this deal. So between the monetizing historic tax credits, the rental operational income, and then the funds from the refi, it's how we bring money back in to pay investors. And then from there, the property is just rented, and, that cash flow, is coming back into, the investor group.
Yep. So a lot of people have been wondering in terms of real estate, what's the impact of coronavirus? And so here's what we see going forward. Coronavirus, first and foremost, is pushing prices and interest rates down. And so that's allowing us to acquire some of these assets in this particular neighborhood at a very discounted rate under market value. And that's where we are able to preserve some of the upside, because if you know anything about real estate, it's very key to buy right. If you ever buy overpriced, you're going to be ending up swimming and trying to get yourself out of that situation for a very long time. So coronavirus is pushing interest rates and purchase prices down. For residential properties, what we are also noticing is that we're going to have a stronger tenant pool. If you've actually studied the trends of rental prices in the midst of recessions, rental prices actually go up. Why? Because people who bought single family homes and bought a 5-bedroom home for a 3-piece family because they wanted grandma to stay there on Thanksgiving and Christmas, they bought all this extra house, and now one of them loses their job and they can't afford that 5-bedroom house anymore. So they either have to come up off of it by selling it, or they get foreclosed on. Where do those people go? They become renters. So now the renter pool has increased, right? But the number of rentals has not increased. So when demand goes up, but supply does not change, what happens to price, y'all? When demand goes up, but supply has not changed, what happens to price? It's basic economics. Price goes up, right? So this is what occurs in the midst of a recession, and you're also pulling from a higher quality tenant in many cases who will eventually own again. We also believe that within a 9 to 18 month construction periods that we're going to have on these projects, we believe that that's enough time for the economy to recover and for us to figure out where everything is going to go. We also anticipate people moving from more expensive markets. We know that work from home is being more common. Companies are realizing that they can release a lot of that overhead or whatnot. And so if I am living in New Orleans or somewhere that is twice as expensive, or let's say 50% more expensive than Baton Rouge, but I can move to Baton Rouge, be closer to family, have a nicer home and a lower cost of living, but still get paid the same, then it would make sense for me to leave that expensive market. We see the one-ways out of New York being the most expensive market in the country. The one-ways out of New York in the midst of Corona have been absolutely ridiculous because people realize that they can't live, that they've been in bondage by that more expensive market. We are also monitoring carefully commercial businesses, and we are designing commercial business models, or finding commercial business models that are COVID friendly. So we're going to talk about it in just 1 second, which is a business model that we're considering for our 12,000 square foot property at Government Village, which is a commercial property. We're considering a cloud kitchen, and we'll talk about that in just a second. So
yeah, and I would say just looking at real estate right now, being in the multifamily space that we're in, where we're not, I wouldn't, look to produce luxury projects or anything like that. I really want to stay in that, middle income, upper middle income. Like I tell people, nice workforce housing. And also that's a key part for, not all of our developments not being these 50, 100 unit type bigger developments. It's I like the chances of renting 12 units out, 20 units out, 9 units out, versus having to do a lease up of 100, 150 units. So that's why, also really like that small multifamily space.
yeah, so of course we want you to touch the properties. In fact, we're going to share a video with you afterwards where you can actually tour the properties with us. We literally put you in the truck as a passenger, and we take you through the properties. And so I'll share that video. It's about a 16-minute tour of the properties that are in the Eddie Robinson Senior Historic District. But right now we're going to show you some actual pictures of the properties so that you can get a feel for them. Anthony, can you tell people why Eddie Robinson Historic District?
I mean, I'm from Baton Rouge, and for me, it's where I had the most connections. So, we're doing some of these older buildings, a little more complex projects. You need, connections to local government. You need, service partners in, the area, people you can trust to be able to help you execute these things. So, one being from Baton Rouge, I like the cost basis of buildings in Baton Rouge versus some of the stuff I did in New Orleans. I tell people we're looking at my type, like very similar buildings, a building that might be $1 million in New Orleans, 500K in Baton Rouge, maybe 600K. And we're also looking at a place like Shreveport. That same building might be 200,000-300,000, but with it being historic, a lot of times on all three of these buildings, if I'm going to do small multifamily, my construction budget is going to be $1.5 million. So, $2.5 million, deal in New Orleans versus doing a deal in Shreveport where it's a 1.7 total cost. That makes a big difference when I'm going to be getting 20%, tax, state and federal on the tax credit side So, the cost basis of land, are very important. And then, this neighborhood and what's happening in this area in Baton Rouge is very important to me from just being from here.
Yeah. So Anthony, everybody, we're going to take questions at the end, and we're going to use the Q&A function in Zoom to answer all of your questions at the end. We want the majority of this to actually be Q&A, but there's been some very sophisticated investors, some folks from the multifamily movement who are asking, are you going to keep equity partners in after the refinance? A couple people have asked that at the same time.
So, this initial refinance that happens, on these projects 12 to 18 months. Yes, the investor stays in after that, and return continues coming from this operational rent. Even with the historic tax credits and the refi, it's not like we're going to have enough of a return to pay investors out where they're getting that 15% that we're looking. What's going to have to happen with this money over the life of the fund? It going in and out of projects a couple different cycles, then that gets us to that ideal return.
Yep, cool. So just to show you on a map where our location is, why this particular plot of 200 acres actually is the square footage of the neighborhood that we're focused on. For those of you who don't know who Eddie Robinson Sr. was, he was the Grambling head coach, historic Grambling head coach.
He grew up in his neighborhood. So yep. With this neighborhood becoming a historic district a couple years ago, that was the name that was given to the district. And if you look at this area, like a lot of areas in inner city communities across the country, you see, you had, downtown, you had some areas that were white wealth, but you usually had these black areas that were de-invested. And what usually happened to them, which happened to Baton Rouge, what happened Third Ward, Houston, happened Treme, New Orleans. Mm-hmm. The freeways were built through these neighborhoods, which, then you'd have that. And some things with desegregation and white flight followed by black flight. And, you see a lot of times in these urban communities, what they have become, areas that, now over the last 30, 40 years have become de-invested. So, the area in blue is the area that the majority of our projects are around, the energy project that we did and around some of the other catalyst projects that we're part of that we'll talk about.
Yeah, so we're sandwiched between downtown Baton Rouge, which is work, and we're sandwiched between white wealth and the Garden District. Literally, when you were coming from the Eddie Robinson neighborhood and you were crossing over Park Boulevard, it's complete transformation. The house on this side, on the Eddie Robinson side right now, may be worth 200, whereas the house right across the street that looks the same is probably around 350. It is the absolute transformation. Everybody, in fact, in chat, type the name of that street in your neighborhood or in your city where when you cross over it, something happens.
Yeah, you're seeing a way bigger difference than 200 to 350. You're seeing really 50 to 70,000, house value to 300 plus is way more drastic than 100K and when you cross over Park.
So look at this. People Happy Frenchie says Del Mar. Terrell says MLK Drive. What did Chris Rock say about MLK Drive? If you on MLK Drive, run. Shamal, Orange Blossom Trail, Danny, King Street, Fairfield. So you all know where that street is in your community, and the same thing is occurring here. On the south side of the community is Terrace Avenue, and so this is a small pocket, and we're going to go into more detail in the projects and actually give you a different type of view. So here are the actual properties that we control right now. We have Spanish Town, which is closer toward downtown, Southern Heights, which is a 60 unit.
Scotlandville.
That's in Scotlandville.
North Baton Rouge, but
in the red.
In the red, these are the projects that we have. Lincoln Hotel, Electric Depot. We're doing our office building in this area. We have some other projects in yellow that are future projects that we'll purchase in the future. But this area where is the focus of our projects in Baton Rouge, and then like I said, with our partner Tevin Wade, he's really focusing on that Scotlandville area and around Southern University, which is also important to us, especially when you talk about HBCUs. And, our thought that these kids are our next generation. One thing we've talked about internally a whole ton is that, how important it is having resources and amenities around these kids around. So, as this education thing gets, even figured out on the college level, doing things around HBCUs is something that we look to do here and in other cities as we grow.
Yeah. So for those of you who are on Instagram, please go to buybackablock.com, and you will be able to see us on Zoom. The angle on the camera isn't as great if you're looking at it there. So please join us on Zoom at buybackablock.com. So this is the actual photo of the neighborhood. As you can see, downtown Baton Rouge is in the upper left. The same red line that we showed you on the 2D example is the same red line that you see here. And these are where the locations of the properties that are in the portfolio are. So we're gonna walk you through those core properties, starting with Electric Depot Phase 2, which was the Catalyst project that Anthony showed you pictures of earlier on. So Anthony, you want to talk to me about Electric
Depot Phase 2. Which we're still in really the planning stage for. This is a HUD project, but this is a project that some of the equity will be raised for. But electric will be 100 units, all residential, near as part of this first phase that we did that was 55,000 in commercial and 16 residential. And our always understanding with this Electric Depot site was that it really was going to make sense when this second phase was done. One really interesting piece that's future plans for this site that really gonna make this project take off down the line and have a ton of value is where this parking lot is potentially future train station if there ever is a commuter train between Baton Rouge and New Orleans. So the city has did some planning. They've had some initial talks, spent some money, but this was the site in the urban core of Baton Rouge that they chose that would be the site for a train station. So also a reason that a lot of our development is centered around this area. Usually when you transit, adds a ton of value to projects and to development projects. So this is the first phase of Electric Depot. This is Restic Social here, which is a restaurant, bar, bowling concept. And then there's another building that's 16 apartment units with some retail. One also in development, that, has been definitely, been impacted by COVID. So, with a lot of this commercial stuff, really trying to, figure it out as, and adjust and adapt. But, adding 100 residential units really helps this project a whole ton, just having that concentration of people there.
Yep. So the railroad track is right here, where you see this darker green. That's the railroad track right there. I know I was in the Northeast in Brooklyn for 10 years, and we see the connection between New Jersey and Manhattan, especially. Of course, with BART in the Bay Area, we see the connection between Oakland and San Francisco. We believe that if this commuter rail ends up getting put in, that the same impact that you see around train stations in New Jersey along that path, et cetera, this property values are going to skyrocket. And so we are well positioned to take advantage of that. Whether it happens or not, that would just be icing on the cake, all right? Now, literally 2 blocks away, it's a Lincoln Hotel.
Yeah, with Lincoln Hotel site, historic Black hotel in Baton Rouge that we're turning into 12 units and 2 retail bays at the bottom. Project we've been involved with about a couple years now. Had a partner with the project that we're buying out of the project to take full ownership of the project. Project that we hoped definitely to get under construction in this last quarter this year. I think we're probably about 90 days out from being able to start construction, finishing up some final plans with that. But beautiful old building, lots of history, with the people that stayed, at this property over the years. So definitely, a project. There's another one of these projects in this area that's a catalyst project that needs to happen.
Yeah.
The Government Village, which this is on the other end of Government Street, more established area. We've owned this building about 2.5 years, and for a lot of these projects, what we did was we knew they were going to have, pretty long due diligence period on figuring out what makes sense. And the crazy thing with looking at Government Village, what we thought would make sense here has, kind of even changed again. But with this project, a lot of our projects we've owned, and what we're doing is transferring them to the fund at no premium, so no upcharge, or even looking at the appreciation that we've had over the year or two of owning the project. But with Government Village, this is a project. We're going to demo part of the building. Has some vendors that we're, definitely figuring out how we were going to, maybe part ways and it's crazy that, COVID, while it sucks for that business, it's kind of actually opened up some opportunities for us to go ahead and be able to move with construction on this property. And this is the property that we really think really makes sense for a cloud kitchen, which is a concept where you really have no front of a house, and like you basically are focusing on takeout and delivery, for the small kitchens and restaurants that's in the concept. But Subway will stay, potentially the insurance company will stay. Most of the other vendors are have decided we're parting ways with. And so this is a commercial concept, and this is one of the projects we've this is what it would look like after development. But we've kind of really been in the planning and discussion phase of what happens here and what does this look like.
Yeah. I just want to be clear, y'all. Do you realize that when you join us, that Subway is going to be one of your tenants? I'm not talking about Miss Jones, old Miss Jones as your tenant. You literally have Subway sandwiches as your tenant. Like, this is the game that we're playing here. We're on a whole nother level. All right. So, so this is this is a design. We're going to take off the back end right here to create more parking. And then we also own this lot in the back as well. So there's opportunity for development there. Okay, so this is the game that we are playing. It's at a higher level, so let's keep on pushing through the portfolios. But by the way, if you are in the Baton Rouge area, I do tours every Monday. I do tours of the property every Monday. All you have to do is DM me, and I'll take a few people at a time on the tours to actually come see and touch the properties. Like, this is in real life. We have keys and control all of these properties. These aren't properties that we are about to buy. I want to be clear about that. These are not properties that we are about to buy. This is not a vision. This is actual. We've acquired these properties. We are putting them into the fund, and we're developing them together. All right. So I just want to be clear about this. It's not some, if we get this property. No, we have the property under control. So I just want to be clear about that. This is a project being led by Tevin in Scotlandville. This is at Southern Heights, and it is right across the street and not too far from Southern University, and 60 units. And we're really excited about this particular project. Even though it's closer to Southern University, unless we get a long-term student housing contract, this is actually just going to be workforce housing as well. This is the renderings, what we expect to do to this particular property. There hasn't been any new development in this community in terms of rental housing for about, 20 years?
Yeah. But the last development over there as far as housing probably was the Palisades on a major scale. So, you're talking, I don't know or even remember when the Palisades was developed. Someone in the chat may know that, but I think that was the major development over there on that side of town. So this is in the Southern Heights neighborhood, near Southern. We're looking, like I said, we talked about earlier, we're talking about the school and having amenities around that school. Scotlandville definitely the major focus for Kevin and his firm, and we're definitely going to definitely have projects we support him in.
Yeah. So one of our smaller developments is actually right here, not too far from our 1440 Government Street property, not too far from Lincoln Hotel, which is the Eddie Robinson lots. It's right there off of Government and Eddie Robinson Senior. As you enter into the community, as you make the right turn off of Government, and so this is really important to us because this is going to establish us in the community. This is where our design aesthetic will be established for what we envision for the community. I want everybody to be clear that this is not necessarily exactly the same as Tulsa, Oklahoma. In Tulsa, Oklahoma, you had a 100% Black community. There are people of all different cultures already moving on this area that we're moving into. We do believe that with the capital that we are raising and the vision that we have, we are going to drive the vision for this community, but this community be inclusive of all people as we develop. But one of the key pieces is this entryway into the community. We actually, we have business partners who own the property on the right over here, but on this empty lot, we expect to do 8 multifamily units. We are deciding whether or not those are actually rental units or that those become townhouses with a rental unit so that we can start promoting home ownership. Our philosophy for this development is comprehensive, concentrated community development. Comprehensive in the fact that we are considering all angles from food, from ownership, from affordable rental, from healthcare to walkability, etc. So that's the comprehensive part. The concentrated means that we are focusing all this capital in one place. When you see real estate development, typically, you see it scattered. You see somebody owning property over here, then another person owning property over here, et cetera. And there's no cohesion whatsoever. And we believe that when we bring everything into one specific space, that there'll be not only economies of scale, but there will be also synergies that are created. When the value of this property goes up, then it's going to bleed over into the other properties that we control in the same area. So this is what we are focused on. And this particular lot is significant because as you make that right off of government, this is going to be one of the first things that you see that establishes that there is change and transformation occurring in this community. And then from there, a smaller project that is actually going to be our first to just build some momentum. And we've already got the construction loan ready to go for that is 1124 South 14th Street. This is right next door to our office. The building on the right with the black wall, that is our office where the construction company is housed. It's going to be co-working space. It will also be an event space for community. But this is currently a duplex that will be converted into four units. We're adding 2 units on the back end of this particular property. And so this is going to be one of the first properties that you see.
Yeah, I mean, and like I said, this property was important just to control with our office space being there, just to control what was next to our office development. And, you know, another great thing that happened as a result of this property was the seller owned the property next door. So she was able to take that money when we bought this property maybe a month and a half ago. She's already started on the rehab of the property on the corner, which was awesome, you know, just to see her and finally, probably after years, be able to do something with this property and have some cash to do it. And like, you know, that's also like that ecosystem that like we want to be part of and, you know, look to take part in developing.
Yeah. So I just want to recap real quick the properties that are in this particular fund. There may be other funds in the future, but right now this is the fund that we are focused on. So that includes Electric Depot Phase 2, which is 100 units that we currently have a 25% stake in. That stake could actually increase as we continue the negotiations with the other people who are involved. The Lincoln Hotel, which we are shifting from a 25% ownership position towards 100% ownership position. Government Village 2, which Anthony owns outright, Kimball Properties owns outright at this moment in time. Southern Heights Housing Development, which we are going to have a 25% stake in. 1124 South 14th Street, which is the fourplex, which we have 100% stake in. And then the 558 Eddie Robinson.
And also understand, you know, there might be some project. I definitely see us doing some of these projects. The only project I would look at Eddie Robinson, like, you know, this is a project that we're having not an issue, but I know something we're going to go through a lot in this neighborhood is everyone doesn't have good successions. And then, you know, some of these properties are adjudicated. So this is one that early on, we're already going through a process of working with legal to help this lady clear the title for her the properties that she thought she owned free and clear. And I mean, we're looking at other properties ran into that issue. So, you know, I've ran into this working in New Orleans, but it is an issue in this neighborhood that, you know, sometimes, you know, people inherit things and, you know, and like you really, through purchasing these properties, you have to like help them, you know, be able to, you know, get clear title or get successions done. So, you know, also with understanding that sometimes, you know, like with Eddie Robinson, I think that's one that we're definitely going to get to the finish line on it. But, you know, we may trade out some of these projects sometimes if something makes more sense or up our equity, you know, in projects when it makes more sense with potentially, it's already happened with Lincoln Hotel and potentially also may happen with Electric Depot Phase 2.
But we would not trade out a project that would change the target IRR. The target IRR is 15%. Can everybody in chat type in 15% is the target IRR? So whether a property address switches out, the target IRR on the money that you invest is always going to be 15%. Is that clear? Okay. We would not swap out something that's going to have a 5% return that may actually draw down the target IRR. That is not the case. Okay. So this is what our target is for the portfolio right now. So let's get into how to invest, and then we're going to answer questions. You know, a lot of people talk about crowdfunding and buying back the block and things of that nature. Of course, in the midst of all the social justice initiatives that are occurring now, everybody knows that ownership is the word, ownership or slaveship, right? And we act like we can't do it and that we've never done it before. We never bought anything as a collective, and it's just not true. How many of you ever bought a pizza as a group before? How many of you ever bought a pizza as a group before? We could go and all buy a slice of pizza in New York. What's the price of pizza in New York? This is why I had to leave New York. New York is financial bondage. You can make 150 in New York and still feel like a slave. How much is a slice of pizza in New York? My New Yorkers, where y'all at? Somebody said $567. Right? A slice of pizza in New York, $3, $4, okay? So let's just say it's the old prices day, okay? It's $2.50 for a slice. $2.50 for 8 slices is $20. And that's because we just couldn't come together and buy a large pizza. We all had to get our own slice. No, I don't want pepperoni on mine. I want this and that. I don't like that kind of sauce. I don't like that pizza place. So now we all buying individual slices, okay? And we're paying more. Whereas if we could just come together and get one large pizza together for $16, you divide that by 8 slices, that's $2 each. We just saved 20% by buying together. We just saved 20% by buying together. And some of y'all, you know, do that green stuff. Y'all know what I'm talking about. Some of y'all do that cannabis stuff, and you come. I'm from Oakland. Remember what was the song in Oakland? Anybody know the song in Oakland? I got what on it? I got 5 on it. I got 5 on it means that you didn't have enough to get it yourself, so all you could put on it was 5 on it. So let's stop it with like, we don't know what collective economics is. We've been participating in it for a long time. You do it for weddings, you do it for group vacations. We do it for all kinds of things that are liabilities to our health and liabilities financially. When it comes to doing it for an asset, all of a sudden, oh, we can't come together. Don't make no sense whatsoever, all right? So look, if we did the same thing for real estate.
We come together for homecoming every year.
Come together for homecoming every year, right? So peep game. We could all go buy $250,000 townhomes, right? Independently from a developer. Or we could say, let's all put the money into a pool together, $1.2 million pool, divide that by 6 townhomes. Now we got the same townhome. Now we living next to each other for $200,000. We just saved 20% by leveraging group economics. Like, it's not complex, y'all. We make it harder than it has to be. We've done it before, and we're just inviting you to do it in a bigger way through real estate, all right? So we want to share with you how money flows. Anthony's already described it with the Julia Street property, but I want to give you a specific example. This is a 5 to 7 year hold. We will create exits. The reason it is a 5-year hold is because the federal historic tax credits have a 5-year hold period. We are also buying holders. Anthony and I, we're not coming up off the properties that are in our personal portfolios. That's just our philosophy. Once we acquire the asset in the right way, we are going to keep that cash flow in our last name forever. So we will create exits for those that need to exit or desire to exit after a certain period of time, but this is at least a 5-year hold, okay? So let me show you how money can flow. If you were to make a $30,000 investment, you invest $30,000 today, August, and everything goes August 1st, 2020, okay? Now you own essentially about 1% of the fund, all right? There's no money coming to you for at least a year, okay? Doesn't mean your money's not working. Your money is working hard. It's just working behind the scenes as we're doing the developments, okay? So now it comes August 1st, 2021, when we have completed the construction on a certain set of buildings, right? And now what happens? We trigger the historical tax credits, the historic tax credits, state and federal. That's 40% of our construction budget that we're getting back as real equity. We take that money, we sell those historic tax credits to a larger real estate developer at a discount, and we get cash for that. And that cash comes back to you as an investor. So based on the pro forma on Julia Street, you would get about $25,000 back of your initial 30 a year from now, okay? Okay, this is just an example. Then after we have the properties at 90% occupancy for 90 days, right, now that they're stabilized, we can now go to the bank for refinancing to a long-term Fannie or Freddie 30-year low interest rate mortgage. When we do that refi, because of all the forced appreciation that we did with the development, we are also going to get more cash out. In this instance, it's another $10,000 cash out based on the refinance that gets, actually it's 15,000 that gets paid back to you as an investor. So look at this, y'all. After 1 year, just based on this example, okay, these aren't exact numbers, based on this example, you will only have 5,000 left in, but you preserve your equity stake. And then 90 days, 90 to 120 days later, after we have full occupancy and it's stabilized and we can go get refinanced, now you're getting an additional 15,000. You only have 5 in, okay? You got 15,000 additional upon the cash out refi. And so now you're 10,000 up. But guess what? You have all your money back, you're 10,000 up, and you still preserve your equity stake. So from there, now you quarterly, even though we're making money monthly, you're getting paid. We're only going to cut checks every quarter. Quarterly, you're getting an additional $1,000 coming to you forever. This is it.
And and also understand, like, this August 1st, this is just an example if we were putting the money all in one project.
Yes.
Since we're putting the money in different projects, this first refi for, like, some of the project might be a little further down the line. Some may happen sooner. Correct. This is an example of putting money, if we were just putting money all into Julia Street. So you definitely need to, like, clarify that, because this August 1st date is going to happen for different projects.
Correct.
Because the money is going to go be diversified over 7 or 8 different projects. So that's also to be understood. But, like, basically, we're refining money, bringing money back in, paying you, dividends out. But then a lot of that money is just being washed into the second phase of the next round of projects. So correct. As far as these first 4, 5, 6 projects, over the life of 7 years, we're going to get this money back in and reinvest it into projects. This cycle should happen at least 3 times.
Yeah.
So that, so this is also understand that, like, this August 1st date on a project like Electric Depot Phase 2, since Electric Depot Phase 2 won't even start construction to January, this date won't happen to, January 2022.
Plus it's larger.
Yeah. And the money's in multiple different projects. This example is only showing if that money was invested all into Julia Street.
Very important. Very important. Okay. If we laid it out and we staggered it, it would look like a step. It would look like steps. And it would be harder to explain. So we just explained it in terms of one project. Is everybody clear on that? Just type yes if you are clear on that. Because we're not starting every project at the same time. Every project doesn't have the same timeline. So I just want everybody to be clear that these are going to be staggered. So 11/24, which is the first property, that's going to have the first start date. And that's when you're going to start to receive return first. Then we're going to start the next and the next and the next. So it'll be staggered. All right. So in fact, real quick, I want to just show you the entire raise, okay? So these are the properties. This is where we came up with the 2.75. 1,070,000 will be raised through the crowd fund at buytheblock.com, okay? The other 1,680,000 will be raised via family, friends, accredited and accredited investors, okay? So we'll talk about those options in just a second. Together, this entire portfolio is 184 multifamily units and 12,000 square feet of commercial, okay? Together, this entire portfolio is 184 multifamily units, okay, and 12,000 square feet of commercial. So this is what you get to participate in and get involved in. Now, in terms of that staggering that Anthony was talking about, here are the actual projected timelines and sequence of the developments, okay? So you see 11/24, for the 4 units, 4 months time to develop. We'll start completing construction December 20th, etc. So this is the staggering of those projects, all right? So everyone has a different timeline. And then Eddie Robinson lots, if that comes through, is not historic tax credit because there's nothing historical there. It's a vacant lot. And then and Government Village Retail is also non-historic tax credit, okay? But the other projects are, all right? All right, cool. So with that, let me share with you how much you should invest, okay? So this is, I want to be 100% clear. We are not asking for your last dollar. In fact, if you are on your last dollar, this is not the fund for you. This is not money that you're going to be getting back immediately. Over the internal rate of return says 15%, okay? But that is over the life of the hold. So this is our projection. So here's how we see it. One, you have your emergency fund. Then you need to have your living expenses. If you're living paycheck to paycheck, this fund is not for you at this moment in time, okay? Because you cannot call us up and say, Julian, I need my money back, and we only 3 months in. That's not how this works. So if you don't have an emergency fund and you're living paycheck to paycheck, this fund is not for you at this moment in time. I can't tell you what to do with your money, but this is our recommendation. And then if you are actually investing in yourself, your own education, and your own business, and you are flipping money at greater than 15%, then we encourage you to continue to do that. But if you have money that is at the bottom of your savings account that is earning 0.03% interest in a Bank of America savings account, then this is what we believe you should invest. We are inviting you or asking you to allow us to make that money work harder, to allow it to stop being lazy, and to literally 15% IRR is 500 times the savings rate that you're getting in Bank of America. 0.03% times 500 is 15%. We're trying to make your money work 500 times harder than it's currently working in a savings account. That is the goal, okay? And then when you really understand wealth, it is what you invest in yourself, in your business, and the money that you get to work for you. That's actually what creates your lifestyle. But some people are actually working backwards. They take what they get paid and they pay for their lifestyle, and then they wonder why they stay in debt. You actually want your assets, the things that you control, to cover your lifestyle, not your active income that you get paid from a job. And when you're able to get that done, then that's when you get to financial freedom. So we are giving you a pathway to financial freedom based on how you invest, all right? So there are two ways to invest. In fact, actually, I need to go get the URL really quickly, and I'm gonna put it in chat. The first way is that we just got approved by the SEC to do crowdfunding and raise money publicly. So you might have heard Anthony and I alluding to this opportunity on social media and things of that nature up until this moment, but we were not allowed to speak about it publicly until late last week, okay? So what I'm gonna do is I'm gonna post the URL in chat right now, and that is for buytheblock.com. So if you are investing less than $5,000, okay, and you do not have a pre-existing relationship with Anthony and I, you do not have our cell phone, okay? Basically, if you don't have our cell phones, okay, and you, but that's basically what we're gonna consider pre-existing relationship. If you ain't got our cell phones, then we don't know you, okay? But we would love to help you, okay? So you're interested but not ready, then you wanna go to the URL that I put in the chat. Okay, buybackablock.com. We'll forward there after this webinar tonight, but I just put that URL in chat. Go ahead and click on that right now, just so that page is open for you, then swing back over here, okay? So that's buytheblock.com. We are actually on the homepage as well, so if that's easier for you to remember, buytheblock.com. We are featured on the homepage as a hot fund right now. If you have a pre-existing relationship with us, meaning that we've slapped hands, okay? You have our phone number, you're a multifamily movement member, or you are a accredited investor and you're ready to go right now, then you want to go to buybackbatonrouge.com and go down to Q5 in the frequently asked questions. Q5 is question number 5, and that lays out the step-by-step process to actually invest with us via our financial intermediary, GainVest, okay? So in chat, please let me know, are you crowdfund or are you current fund? If you are crowdfund, type crowdfund. If you are current fund, type current fund. All right? I just want everybody to be clear and go down the right path. We have to stay in compliance in terms of the SEC, okay? We do not want to be in violation of that whatsoever. So we need to stick to these rules. So I just want you to know and label yourself what you are, crowd fund or current fund. All right, cool. So,
you teach yourself.
What you mean?
Why you teach?
Hey, for sure. So, for those of you who go to our crowdfund, here's how it's going to look. I'm going to walk you through the process really quickly. Then we're going to jump into Q&A. Okay. So, crowdfund, you're going to go to buytheblock.com. Right. You'll see our fund there, but do not go quickly to invest. There's a couple steps that you need to do first. Okay. You're going to go create an account. And then the first step you have to do, once you create an account, you need to go attach your bank. You need to go attach your bank, okay? So you click here, you attach your bank. They're gonna ask you what bank do you have. Then they're gonna have you, you wanna click instant account verification. This recording and replay will be up for you to follow, okay? And I'll snip it up for you so that you can, and I'll paste it on our Buy Back Baton Rouge page, all right? Then it'll ask you for your online account ID. It's all synced with the various banks throughout the country, all right? And then from there, it's gonna send you a text message with a code, okay, to verify that it's you. From there, your account should pop up and you'll select the account that you want to draw from, right? Then from there, you'll see My Banks, okay? You'll click this one and then click Update. You'll click the one that you put and then you'll click Update. Now you can go back to the fund page, okay? The fund page where our whole layout is, and then you can select how much you're going to invest. In this case, this is $1,000. You select shares. That will take you to this page where you turn all of these to yes, read them, turn them to yes, and then select your net worth. This is to verify if you are a accredited investor or not, okay? Then from there, it'll say proceed to invest, big orange yellowish button. And then from there, your payment will be pending. Many of you, if you go to that page right now, you'll see that, oh, they ain't raised no money yet. Nobody's invested in them. It takes 5 days. It takes about 5 business days for it to reflect on our homepage, okay? So that is part of the process, and that's for everybody who's going the crowdfunding route. For those of you who have pre-existing relationships, investing more than $5,000 or accredited, you are going to go to buybackbatonrouge.com. You'll go to Q5 in the FAQs, and there you will see the instructions to to invest via GameVest. There'll be a link there called gamevest.nac.com, and that will guide you through a similar process, but through a different portal in order to invest at that level because we have a pre-existing relationship with you or you are an accredited investor. So all of that is laid out on buybackbatonrouge.com. So with that, we want to step into questions. If you know Anthony and you have a stronger relationship with him, then you can actually, yes, if you know Anthony and you personally want to ask him a question, that's his email address, but most questions should come to me, okay? Anthony is out there pounding the pavement, doing the acquisitions and leading the development. Most questions should come to me, but if you have a personal relationship, you're like, I don't know who this Julian dude is, I need to ask you a question. He's probably gonna forward the email to me anyway, so email me, all right? All right, so with that, we want to take on any questions. The way you're gonna ask questions, you're gonna use the Q&A function in Zoom. Please, I'm gonna repeat this, y'all. Do not ask the questions in chat, okay? Chat is gonna move too quickly. We will miss your question. We're gonna take questions via Q&A function. There are already 34 questions in there. We're going to pound through these questions for the next 24 minutes, see if we can get through them by 8:30. Some of them will likely be duplicates. We want you to be informed investors. We do not want you to invest blindly. We want you to be active participants in this process. This is why we also have the How to Buy the Block Facebook group where we are showing you. So, you know, sometimes you invest in stocks or you invest in other real estate funds and you just, I don't know where my money is. I don't know what's happening. Every week we are posting content, every day we're posting content in the How to Buy the Block Facebook group, showing you what we're doing with your money, how we're making it work, how we're flipping it, okay? We want you to be active participants. We want you to learn as we go through this process. So that's part of where the transparency comes through. We'll also be held accountable by GameVest and by Buy the Block, okay? So we are going to push through these questions right now.
Yeah, I mean, I'm just reading the questions. Right. As a developer, would you describe what working with the utility company has been like? Been fine. I mean, look crazy in New Orleans working with utility companies, but Baton Rouge is fine. I mean, I know people that work for water company, energy, so never had real issues there. Okay. As a developer, will you be explaining about the insurance coverage in terms of environmental disasters? Get hazard insurance. We typically don't buy in flood zones. I like to stay away from flood zones, but right. I mean, we'll have hazard insurance for the properties in case, you know, any natural disasters or anything like that.
Yeah. So Trina, what's going on, Trina? Trina's family. Why is the Eddie Robinson lots only $50K?
That's what the
that's what the lots cost.
That's what they. I mean, but at the end of the day, too. I mean, we're working in the urban community. I mean, but right where their price is what I would like, you know, in this area, like what we ideally pay for land, but. I mean, that's what we came to agreements on. That's what she wanted for him. Yep. And I mean, the part of it was she knew she had some, they were adjudicated. She had brought him from the city years ago. So right now in Baton Rouge, we do have some issues with totally clearing the title on adjudicated properties. Basically, you have to get those previous owners still to sign their ownership over in like an affidavit before it's clear like title where you can go to the bank and get lending. So we're you know, maybe under market value because you know, she knew she had some issues that we were going to have to work through.
Yeah. So Kim Morgan, this will be 15% return annually. Yes.
Let me explain. Let me explain it.
Yeah.
So, you know, what we're trying to average out is 15%.
Correct.
That's not saying that, you know, basically, you know, you have to understand over this first year and a half, we're going to have a lot of development. So some of the return early on is going to be lower. And then when we get the tax credit equity and we get the refis, we boost them in. And down the line, when we sell the project, you know, some of the returns within the year are going to be a lot higher. So now that return averages 15% over the life of the fund.
Correct. Please type clear if that was clear. That this does not mean that a year from now you're going to get 15% on the $1,000 or $10,000 that you invested, but over the life of the fund, it will average out to be a 15% return. This is what IRR is. Okay. We want to be very transparent. We want to be very transparent and clear about what is going to occur. All right. So Akil says, how long can you stay being an investor? So Akil, like I said, Anthony and I, our philosophy, we agree on this, is what makes us brothers, is that we believe in buy and hold. We want to reclaim and own in this community for a very, very long time. And so as long as we stay in, unless I don't even know what the reason we would sell would be.
I mean, one reason is, you know, just everything's always for sale in the sense of that, like, you know, you have to go with the things that make sense. My thing is that we get 7 years down the line with this multifamily portfolio and it makes sense to us and we have an opportunity to say, you know, whether it's buy into another deals or get into storage at great prices, at the end of the day, we have fiduciary responsibility to, you know, do what's best with you guys' money. Community, revitalizing a community like this, you know, the people and the buildings important to me, but at the end of the day, you know, that it's not to say 5 to 7 years from now we're going to still think these type of projects make sense. So you know, at that point, you know, we may decide to sell, you know, and liquidate and give, you know, pay our investors back, you know, get you guys to return and say, hey, now we're, you know, launching this fund to invest in this. You know, 5 to 7 years is too far down the line to just know what our plans, you know, will be and what will make sense as far as developers then.
Yeah, and Nikhil, what happens is as we return your capital back to you through the historic tax credits, through the cash out refis, and through the dividend payments from rental revenue minus operating expenses, we hope that after being good stewards of your money that you will continue to invest in the future funds that we develop. We may create another portfolio of another 4 properties in the same neighborhood or in Houston 5th Ward or in Memphis, et cetera. So we want this to be a long-standing relationship as long as we do right by you and the economic resource that you worked hard to earn as you give it to us as stewards. Pamela, is there a fee to invest in the project according to the amount that you invest? And thank you. There's no fee. I do want to be clear that buytheblock.com does have, we get charged 4.5% through buytheblock.com. That is for the service that they provide. They handle some legal, they handle the development of that website. They have a full team that is support staff. So that is how they make money. But that has already been that expense has already been accounted for in our pro forma. So it does not, your 15% target return, it still comes after accounting for that 4.5% expense that we have to pay them for the service that they render to us. Okay.
I can't do nothing about your credit, Felicia. She said, does being an investor help boost our credit anyway?
No, not that I know of.
Unless you want to come sign on some of these loans, that might do something for your credit.
Right. Denisa, can this be done in other cities where gentrification is prevalent? We believe so.
I mean, do you want to give your talk on colonization?
Oh, yeah. So first and foremost, we think we even though I'm from California and then lived in Brooklyn, we believe in the South. We believe that our folks are coming back home. This is the land that many of us tilled, and so we believe that it's easier to occur here in the South. But there's a distinction that we make between gentrification and colonization. What we've been calling gentrification is actually colonization. Colonization is when outside people come to try to displace the original indigenous people of a particular community, right? And we've been calling it gentrification when that occurs, and when in fact it's actually colonization. Gentrification is actually the upliftment of a community. So if there's an entire Black community or entire black block, like in Brooklyn, and they all decide to paint the facades of their homes and plant flowers out front, guess what? These all Black owners just gentrified their own block. So gentrification is not a bad thing. Gentrification, now they all have more equity. Their homes are worth more. They can go get HELOCs. They can now make that money flip and take that dead equity out of their walls, et cetera. So we have to be very clear about the language that we use in terms of gentrification and colonization. What has occurred in our communities has been colonization. What we are doing is the good side of gentrification, okay? What is the target completion date of this project? We laid out the timeline for you. I'll go back to it real quick. This is our projected timelines. There's things that we have to get done from a legal standpoint, from a permit standpoint, et cetera. But based on our awareness and the information that we have right now, these are our projected timelines for the projects in this particular portfolio. Okay. Next question is from Leslie. What happens to the Black people that are living there now?
I mean, and that's something that's been very important for us, you know, is how to include people in the neighborhood in construction, eventually investing in businesses. And like, that's part of the ecosystem that we're looking to develop. And that's why it's important for us to have partners like Kevin, for us to put our actual office in this neighborhood. I actually have a house in this neighborhood that I live in when I'm in Baton Rouge. I live full-time in New Orleans, but I go back and forth. So for us with revitalizing Black communities, you know, for us, you always talk about a lot with my team, it's important for it to look different this time. A lot of people talk about white flight, but we don't talk about Black flight in the sense of, you know, the suburban areas developed in the 70s, 80s, and 90s. And you saw a lot of Black people follow whites out to these suburban areas in the 80s and 90s, you know, like in the sense of white is right, you know, and that, you know, took a lot from these inner city communities. So for me, it's very important this time around to, you know, not only just come in and develop buildings and make some money off rent, but actually put my business here, actually put my house here. Because I tell a lot of people, you know, the big challenge for me, and I challenge, you know, a lot of, you know, my peers in Baton Rouge is, you know, we can run out to the suburbs and, you know, buy a house top of the market, you know, with no equity, but you can come into a lot of these inner city communities, buy a house, you know, and put some money into it, and now you have equity, and now your house is actually an asset to you versus, you know, really being a liability to you, you know, being in the suburbs with this house that's, you know, worth $401,000 and, you know, you're 400K, you know, in on it, you know what I mean? So that's a big challenge to us is how, you know, to also bring people into these neighborhoods, to increase home ownership into these neighborhoods, and, you know, rebuild some of the people in these neighborhoods. You know, we are in an inner city neighborhood, so is there some people in the neighborhood selling drugs and doing other stuff that, you know, may not be a benefit to the neighborhood? Yes. So you either figure out ways to work with them and, you know, try to get them to change their ways or understand what they're doing to the neighborhood, or, I mean, it's a work in progress, and you figure out, you know, just really how to make it happen and how to, you know, rebuild a community that accommodates all people. And that's the, you know, important, you know, opportunity that we have with this neighborhood, you know, is to bring Black ownership in through, you know, investors, but also, also rebuild the inner city Black community.
Yeah, and we're going to give you a very specific example. So there's a business owner in the community. He lives in his business currently, and he has a very decent piece of real estate that is next to one of the pieces that we own. And we are trying to get creative with him, and even have considered building him a house on a lot that is adjacent, because right now he does not have the economic resource to fix the one that he is in. And so we are thinking creatively about how to preserve the fabric of the community, which is always going to be the people. There's a people first, and then there's a property second. And so this is the extent that we are willing to go, and the creativity that we are seeking to have to make sure that the people who are actually from here don't ever have to leave here. And it is a hard battle. For instance, we bought one property at 1124, and the tenant is paying $400 rent. We cannot get you a 15%. We cannot get all of you a 15% return at $400 rent.
So, with that being said, he is going to have to end up moving, but what we did for him was give him the last 2 months free, and we're going to help him with his moving expenses.
Yeah.
Another thing that we had to rehab the property is a total gut rehab.
It's going to fall on
it
him.
wasn't, it wasn't going to be a situation where he was going to stay in the property anyway. So, and I'll have to post the handwritten offers that I do to this other property owner. I just go sit on this porch and write him handwritten offers. We're going to get to a deal one day, but my latest offer is I was like, bro, I'll build your house. Like, you tell me what a house is, and like, we're going to take this money that I would buy this land and I'm going to build you a house.
Yeah.
You got to get creative, you know what I mean? But at the end of the day, he's living in a house that's falling in. It does have, a lot of value to me for this property. So it's like, hey, how can I do something where, this guy's comfortable, he continue to do what he needs to do as living, and also, move us forward as a business.
Yep. Rochelle, Julian, is the annual January NOLA event, the Wealth and Real Estate Weekend in 2020. Yes, we are still hoping that if COVID quiets down here in New Orleans, that we still have that event live, and we would definitely be taking a bus tour collectively out to Baton Rouge for the second day on Sunday. So we'd probably be getting up early and getting on the bus around 8 a.m., taking the 70-minute trip out to Baton Rouge, and we'd spend the entire day out here going through these properties and actually doing the workshop out of the office on South 14th Street. Okay. Kentfield, what is the purpose of classifying properties as historic?
Well, it's a historic district, so we're not, it's not a situation where we're putting sites on historic registry as their individual significance. With this being a historic district, anything that meets an age requirement and had substantial changes to the facade or the look and feel like qualifies as historic. And with that, that's important just to, explain how historic tax credits work. Historic tax credits, you get them on your soft costs. So, your soft and your hard costs of construction. You don't get them on the purchase of the building. So let's say we buy a building $500K, but we have let's say $1 million construction budget. We would get 20% in state and 20% in federal. So that's $200K in state, $200K in federal. And, just for easy numbers, we typically can monetize those credits at 80%. So, now you're looking at 160, 320, in real equity to come into your deal. And why this program was put into place, this program was put in place by the government with a lot of these old blighted buildings that would have lead, asbestos, all these brownfield, all these environmental problems that, to go in and remediate these problems and rebuild this structure on how, these buildings were built 50, 100 years ago, which is very different from how we build this stuff we build today. It made the deal financially feasible. So, either a developer would keep these credits for themselves or they would monetize those credits. So that's the importance of having these historic tax credits in the deal. And for, me, a guy like me as a developer, it's just for me, it's a financial feasibility of how I look at tax credits and why I would rather be in a small to mid-sized market like Baton Rouge or Shreveport versus a DC or, a bigger market, because on a, building I could buy for $200,000-$300,000 and have $1 million, $2 million budget. Those credits are worth a lot more as a percentage of the deal, versus, being in, a DC or someone that have to buy the same building for $1.5 million, $2 million, and, have a $2 million construction budget.
Yeah. So I see people asking questions in chat. Please copy those questions over and put them in the Q&A function. If you see anybody ask questions in chat, please tap them on the shoulder gently and tell them to copy it and put it in the Q&A. Next question is from Gina. How many investors are you accepting? Gina, the minimum investment is $1,000. We are accepting as many as we need. On the GainVest side, the family and friends round, we are doing 3 funds of 35. That is the limit for Reg D. So that will be 105 investors on that side. But on the crowdfunding side, at 1,000 being the minimum, we could accept 1,070 investors if everybody contributed $1,000. So that's that. Please explain how you calculate the 15% rate. The 15% rate is actually based on our pro forma, our 6 pro formas combined. Pro formas are basically the financial analysis that we run when we calculate all the soft costs, hard costs, the cost of acquisition, developer fees, et cetera, for a property, as well as the cash flow that will occur in the operating expenses that will be there once the property is in full operation. So when we look at those numbers and we look at the monthly return as well as the appreciated value of those properties, that is where we generate the return, the 15% return, when we stack those 6 pro formas on top of each other. Individually, they're all over 15%. So we know that 15% for the entire fund is our target.
And then from there, to just be finding, you know, additional projects as we move over the life of this fund, you know, that are at that, you know, return or better. Can our increase? Yes, it can. How that happens, you know, lower interest rates on loans, getting higher rents than expected, getting better ARVs on refis than expected are some of the ways that the return could be better.
Yeah.
Could you start out with one amount and then invest? When is what are the ideas?
Right now, it's September 30th. We're close. We want to close this entire fund by September 30th. But it's, if we raise before September 30th, the fund is closed. Once we reach the amount, we're not taking more than we need. We're not taking more than we need. So we will close the fund as soon as I think we're going to beat our date. So, you all know that I'm a money magnet. And so, and I understand the energy of money. So it's going to come. And we hope that it comes before September 30th. So that is our target. Now, if we, for whatever reason, and I don't even want to speak this into existence, if we, for whatever reason, did not reach our target amount, what we would do is we would take a particular property out of this particular fund and just execute on 5 of the 6 as opposed to all 6. But I don't foresee that happening whatsoever. We've been waiting for this moment to be able to speak publicly about what we're doing here, and we know that the floodgates are going to open. So don't be fooled by what you see on buytheblock.com in terms of how much we raised. It actually takes 5 days for that money to show up as funded. So we could actually have $250,000 in there right now, and we won't actually know till next week. So please do not delay if this is something that you really want to do. Okay. Will you be sending this deck out after the meeting? I will post a replay of this on buybackbatonrouge.com so that you can go review it there if you would like to. But not actually, I'll put a PDF of the deck up as well.
Can you take your initial payout and reinvest? And yes, but you know, don't think that, you know, that year timeline. Like I said, you know, I just wanted you to understand that, you know, that was just showing $30K going into one deal, and then how that money would look coming out of one deal. So I just don't want anyone to have the expectation that I'm getting all of my principal back, and you know, within this first year. But as you do get these dividend payments, you will have the opportunity to, you know, reinvest them back if you want to.
You'll be the first to know. You'll be the first to know about any additional fund that we create.
Yeah, can you explain the historic tax credits?
You already did that, but how are they sold?
So historic tax credits are usually sold through high net worth individuals or organizations that have huge real estate liability. So, you know, let's say, Chase Bank, you know, US Bank, some of these entities that have huge tax liability are, you know, entities, you know, because they have huge real estate liability, you know, versus because of the business they operate. So think, you know, like construction companies, like a huge construction company could buy tax credits because they have pretty big, you know, liability for taxes in relation to real estate. Let's see. What's the next one?
Next one is there 1K minimum amount to be invested? Yes. Which investment option is best? I'm interested in either, just want to adhere to the guidelines. So I'll be clear. If you do not have a pre-existing relationship with Anthony or I, then you want to go the crowdfunding route. If you have a pre-existing relationship with us, you're investing more than 5K, or you're an accredited investor, you want to go the GainVest route. Okay. All right. Will this webinar be sent out? Yes, it will be. I already have an account with GainVest. Do I need to open another account specifically for this project? No. Dwight, as an investor in Julia Street, in the other fund that we created about 3 months ago, you can just add more via GainVest. So you'll be good to go there. Will I get a copy of this investment option? What are the differences between buyback Fund 1, Kimball Properties, Fund?
And that's what we were just more talking about. If you've invested through Kimball Properties Fund 1, that means you have a pre-existing relationship with me.
Yeah.
So just go back to, you know, you can add to your investment. This was created for, you know, people that didn't have a pre-existing relationship with me.
Yeah. So pre-existing, if you have our phone numbers, we got a pre-existing relationship. If you do not have our phone numbers, You likely don't have a pre-existing relationship. So let's stay in compliance, y'all. Okay. Oh, the 401k. Yes, the 401k. How can I use money from my 401k? So you cannot use money from your 401k for buy the block. You're going to have money in. You can use it, but you're going to have to transfer it to your personal account. I want to share my screen with you really quickly. We've actually laid out the steps to do that. So at buybackbatonrouge.com, we have a very detailed Q&A section. Okay. Just scroll down. It is here. The replay of tonight will be posted on this page. Okay. It'll be right here. Important documents will be right here for you to review. But the frequently asked question is very thorough and detailed. Many of the questions that you're asking right now are already answered here. For those of you who are going to be using GainVest, you want to go to Q5. You want to go to Q5. Everybody else wants to go to buytheblock.com. Now, for those of you who want to use 401k money, there is no penalty through the end of the year on early withdrawal on your 401k money. So you are going to want to come here and look at your Q9, which is, can I use my 401k? There are 4 options that we've outlined step by step by step, and how to get money out of your 401k and actually deploy it towards a fund like ours. So one is loan to self from 401k. That's the easiest option. Traditional IRA with custodian, solo 401k for self-employed entrepreneurs, and then the checkbook self-directed IRA. All the steps are there for you if you want to withdraw money from your 401k to invest in the fund. Okay. Here's what the buyback Baton Rouge buy the block on buytheblock.com. This is what the page looks like. When you get there, I've already shown you the steps to do that. So you can go to the replay to walk through that. But this is what the buytheblock.com page will look like. But this is our core page here with all the frequently asked questions and where the replay will be posted. So you'll get an email about that tomorrow morning. Okay. Patrice, can you say SDIRA money, IRA money, self-directed. Yeah. Yes, you can. It's right there, Patrice. And Patrice's family. Patrice is actually one of my multifamily movement members who I helped acquire a duplex in Charlotte, North Carolina. Patrice, happy to have you involved and expand the portfolio in this way. Can you post a website for the crowdfund? The website for the crowdfund will be forwarded at, you can go to buytheblock.com, and we're on the homepage right now. If you go to buytheblock.com, we are featured on the homepage right now. So we're right here, okay? Next question, tax-wise, are these payments typically treated as income for investors or capital gains? They will be capital gains.
Yeah, dividends. You will receive as part of LLC. You will receive a K1. And like I said, definitely as far as how this will be treated, definitely check with your accountant. As far as, but it's usually treated, I think, as income, especially with over a year-long hold, Lauren.
We're not. It's not. It'll be income because it's not. We're not.
And that's Lauren and his family out in the Bay Area. They bought their first home out there, and they're looking to expand Bay Area prices. So if you are in an expensive market where buying multifamily real estate is challenging, then this investment is allowing you to be a real estate investor. If you have bad credit but you still have some cash, then this is a great investment for you to become a real estate investor. If you are also in an expensive market and you're living paycheck to paycheck, but you have savings, but your monthly isn't actually generating any income, then this is an opportunity for you. If you bought a single family first and realize that you might have got caught up by buying a single family first, and you can't find a market or a way to put 25% down on your first investment property, then this is a way for you to expand your portfolio. So if you're in any of those situations, this is a way for you to become a real estate investor without having to deal with property managers, without having to deal with tenants. We're handling all of that, okay? So you can still be a real estate investor without all of that. The other thing is, I want everybody to be clear that your money doesn't have to work in the same city as you. Some of you are in some expensive markets. I know a lot of folks from the Bay Area are here, because Anthony and I went to school out there and our networks are strong there, as well as folks from Brooklyn. Your money does not have to work in the same city as you. Some of you own Apple stock, you've never been to Cupertino. Some of you own Nike stock, you've never been to Portland. Some of you own Amazon stock, never been to Seattle, right? That is your money working in a different city than you do. the most important thing that you're supposed to do as a steward of money is you're supposed to employ it at the highest levels possible. Doesn't matter where it's employed as long as it's being productive. In a savings account, it is not being productive. And so if you trust myself, you trust Anthony, and you trust the business plan that we've laid out for you today, then this is an opportunity to employ the money that is at the bottom of your savings account. Remember, we are not asking for your last dollar. We do not want your last dollar. You need to keep your last dollar, and you need to get your bars up, right? By increasing your income, increasing your skill set, etc. But if you have money that's at the bottom of your savings account that is unemployed right now, then we would like to make that Benjamin Franklin, that George Washington, that Alexander Hamilton, we'd like to make them work a lot harder than they're working right now for you, okay? We're gonna take about 5 more questions and then we'll call it an evening.
Okay, next. Contractor-wise, me and Kevin are partners in a contractor company. We try, we do have black subs. One thing we talked about is one thing we've realized as far as building out, we have electrical contractors through Kevin's company also. We're looking in the future to build out, electricians, plumbers, train people. For us to really develop that black workforce, we're gonna have to train people. So that's something that's, part of this long-term ecosystem that we're looking. How much of your money will be invested? So
I'm 390 in. I'm 390 in. Okay, so you wonder why I'm in Baton Rouge 2 days a week? Because I'm 390 in. All right, so that's personal bread that I'm putting in, overseeing. And so when I'm making sure that I see this through the finish line to hold these guys accountable and push your money forward.
Yeah, we're as part of this Mid-City plan, we're putting the money into our Kimball Properties Fund because that's where we have a bigger cap. We're putting $500,000 of our company money in. So we'll be $500,000 invested in, just all of these same buildings.
Yep. And then we'll take 3 more. Is this considered a private equity or mutual fund?
So this would definitely, we see it as a private equity vehicle.
Yeah.
Some type of, a real estate, private equity vehicle where we're pooling money together. Mutual funds is public markets, so stocks and stuff, all within a fund. So we would be more on the private equity side.
Teresa, you signed up for the current fund last night. That's great. What you'll see is when GainVest sends you back your subscription agreement that has been signed by me and Anthony, then on the last page of your subscription agreement, which is page 98, by the way, will be the wire transfer information to send that money through GainVest to us. Okay.
And is it still a couple day hold with GainVest? How's that working?
Yeah, so GainVest does do a background check, and so you'll sign, I'll sign, they'll do a background check, then they'll send us both the completed subscription agreement back, and then on the last page, page 98, you will see the wire instructions, okay?
Can I invest through a business? You can invest through an LLC, you can invest personally. That's on personal preference, and those are things that, I would talk to my accountant on what benefits you most.
Do you know what's going on with the property at 20th and Spanish Town Road? It was a clear block listed at?
Yeah, that's near the state capitol, I think. I thought I forgot. I think Elephant has that one right. I don't know the exact. We text back and forth, but I couldn't tell you the exact specifics.
Jessica, almost all the projects will use tax credits. Have you secured tax credits for all your projects? We will secure them upon construction. We are in the process of finding the buyers to purchase them.
What the process for tax credits is, you go through a phase 1 and a phase 2. So phase 1, this project is historic because, it's in a historic district. It's on the National Registry. That's phase 1. Phase 2 is you tell them what you're going to do to the property. So all your plans and stuff like that. Then you do construction. And then phase 3 is when you exactly the amount of tax credits you're going to win. And then those tax credits are issued through a K-1. So, as far as that phase 1, phase 2, and, the individual tax credit investor on each one of these projects, that's something that's part of the development timeline and, development tasks as we, move through these projects.
Yes, our multifamily movement members, my students, consider pre-existing relationship. Yes, that you are. Yes, you are. Pamela Peters, can you gain best for 20,000? Yes, as long as it's pre-existing relationship. Pamela, otherwise, right now I think the max at buytheblock.com is $5,000. If you do not have a pre-existing relationship and you want to invest more than $5,000, then please email me at Julian, JULLIN.Gordon@gmail.com, and we will figure out what's the best route for that. The next question, we'll do 3 more. Can you tell us about Baton Rouge and what does it attract people? Who are the employers here?
Employers here is, Baton Rouge is the state capital, so that's for one. We have 2 major universities in LSU and Southern. I'm not going to sit there and tell you Baton Rouge is a place that's growing a ton and it makes sense because of that. Baton Rouge is a place that makes sense because of the relationships I have here and that we're able to get properties at market or below market value, and we're able to execute because of the resources we have here. I'm a believer if you're able to buy at the right price, execute at the right price, you can make money off real estate in a lot of different places. Mm-hmm. So with that being said, Baton Rouge works, for me because I'm here and I, have relationships in New Orleans. So that's why those places work for me. I couldn't go just to Cleveland or Pittsburgh and just, because I don't have those ground relationships that I have here. So, one of the reasons Baton Rouge makes sense is because of the relationships. Like I said, it being a state capital, it does Exxon refinery, Dow refinery, those type of things. We do have industry here, versus a place like New Orleans that I'm not as huge on moving forward because everything is so based on tourism. Yeah. Even though I have some projects in New Orleans, but it's something I'm not as gung-ho about New Orleans because of the so much is based on tourism.
Yeah, Jocelyn, is $5,000 for the current fund or crowd fund? $5,000 will be $5,000 or more will be current fund. Elisa, how will you know who to pay quarterly? We pay everyone quarterly. Everybody who's invested.
That would be based on your pro rata share overall of like how much you invested in the fund. Yep. But what people, if you're potentially looking at this as an investment, with it being a passive investment, I would just look at it like this. I'm buying shares, in tangible assets, versus I can go buy shares of Nike. I can go buy shares. You know what I mean? This for me, this is a private equity vehicle that I can go buy shares in, that my return is going to be produced for me through monetizing tax credits, refined properties, and rental income, and then selling those properties down the line. That's how I know that those are the things that, my group is, how we're going to get that return from, back to you guys. So, you're buying shares in a tangible asset, and that's how, you're going to receive a return.
Yeah. Elisa, is there a contract to sign through the GainVest process for that $5,000 or more and pre-existing? Yes, you have to sign a subscription agreement. Through the buytheblock.com process, there is no particular contract to sign. Though there's a binding agreement, but I went through the process and there was no necessarily contract to sign.
It's not a subscription agreement as lengthy.
Yeah.
It's not. You're
it's
just
easier
not
process.
signing. Yeah, it's a more streamlined process.
Yeah.
With GainVest, you're literally there docu-signing and sending you the full, operating agreement and subscription agreement. So, both of these are SEC registered investment, platforms. Yep. They just have a little bit different in process. And with GainVest, to understand why we went to buy back the block is GainVest is not registered to do crowdfunding yet. They're still working through some FINRA stuff to be capable of doing crowdfunding. So that was the reason for us to use Buyback the Block to, now publicly talk about and bring in, money from non-accredited investors we didn't know. And, for us, that's, important to be able to share and, that to, people just outside of our circle and our network.
Yeah. How are you different than Tulsa Real Estate Fund? I love this question. You want to know why? Because I'm the lead investor in Tulsa Real Estate Fund, and Jay Morrison, I consider him a brother. What makes this different is that Tulsa Real Estate Fund their investments are spread out primarily throughout the South in different communities and cities. One project here, one project there, one project here. As you can see from this image right here, our philosophy is comprehensive, concentrated community development. So we're focusing all our capital in one specific space. That's the only difference. Besides that, our missions and our belief systems and our morals are the exact same as the Tulsa Real Estate Fund. So
what Jay's, like I said, big ups to what Jay just did up in follow him. Last time we talked, it was crazy. I sent him an email. He had sent in like 2014. That I had to send back to him just on some content he was doing way back when.
Yeah.
But at the end of the day, they're looking, while we're more going in leading developments, they're looking for more partners to come in and partner with. We're more, on the side. So, for someone like us, we would more partner with a Tulsa real estate fund when they're looking to disperse their capital.
Yeah.
For us, we have already identified the projects, so it's not as much as a blind fund. And like I said, it's just different investment strategies.
Yeah. Demetrius, once I invest $1K or so, do I just let it work for me? How do I know what I've gained in the year? So Demetrius, every year you will get a K1 that our accounting department will produce for you to show the value of your investment at that moment in time. Even after year one, it actually may look and appear lower than $1,000. Why? Because we've been producing a lot of expenses during the development phase. Remember, the target IRR, everybody in chat, the target IRR over the life of the fund is what? The target IRR over the life of the fund is what? Okay. So if you see a dip in year one, that's only because when you plant a seed, do you plant it in the air or do you plant it in the ground? You plant it in the ground. It has to go down in order to go up. It's just basic physics. Is the way everything grows. So we are going to be planting seeds here in the Eddie Robinson Senior Historic District in years 1 and 2. But when we plant those seeds in fertile soil, they will bear fruit.
And I think that's also where the Facebook group and stuff comes in. And,
Correct.
And we'll be sending out, updates monthly, quarterly, depending on the different projects that makes the most sense. But that's where that Facebook group really comes in. And we want this to be interactive. We want people to post questions. We're posting, our, architecture plans. And for us, it's really important for, everyone to be a part of this, to, have an understanding. We can't get bogged down, with small say, hey, why y'all painting the walls? Great, but, we do want this to be educational. Because for us, we want you guys to be able to do this in a city that, you live in, or, we want to be able to come to Greenville, South Carolina, Birmingham, Alabama, and potentially partner on the deal because we know we have a ground partner there.
Yep. Last two questions, y'all. If I'm the buddy of someone in the multifamily movement, am I considered a pre-existing relationship? Yes. If you're a student of mine in any way, then we have a pre-existing relationship. I've been helping you become a more sophisticated investor, and we have proof of that in case the SEC ever knocks on our door, okay? And then Bernard, is it possible someone could take money out of qualified account and receive a tax break? Bernard, you're gonna have to talk to your accountant about that. We are not professional accountants, so please always go verify that with your accountant. Deadline to invest is going to be September 30th, but I have a feeling that with this fund will not last that long. $1 million, $1,070,000 is not a lot in my mind. And so I'm pretty certain we're going to close this fund well before that. All right. So please do not.
What is the plan? The ARV value is not met as planned. I mean, I think that's for us, that's where the tax credits come in. And at the end of the day too, when we take a construction loan, usually, we're getting a ARV appraisal, based on what that finished project. So let's say, I get an appraisal on Julia Street, 1124 after it's, when we get that construction loan. When I go get do my refi 6 months, 12 months down the line, I'm using that initial appraisal as, a point of reference. And that's also why it's important to be doing other projects in the neighborhood, because the appraisal game is really very subjective. And if you know how to work with these appraisals and send them, stuff, hey, this is what these last 3 properties have went for, and you know how to have that conversation, the appraisal number, I think, you can get it where you need it to be. But that initial appraisal, when we get the construction loan, I mean, that's going to give us our ARV, because a lot of times you also got to understand, looking at some of these projects like Electric Depot, that refi that we're doing with a lender that's going to provide that Fannie or Freddie, we got a soft quote and kind of a commitment doing literally on that refi while we're literally doing the construction. You get those soft quotes and get those numbers locked in. So literally, because that also helps with your initial bank financing, in the sense of this initial bank that's doing my construction loan, I already got a lender that's going to take me out. when, you know, when this thing is stabilized,
Correct.
you know, that also things that you negotiate with your initial community bank lender. Say, hey man, I ain't even need y'all to do permanent loan. I'm paying y'all this bank fee. I'm paying y'all this interest over 12 months. Y'all gonna make y'all money. And then I got somebody that's gonna take you out after 12 months. Yeah. You know, as far as a Fannie or Freddie lender. And all those things are part of like you negotiate, but you want to have all those things set up. You know, these are things that take place in like before that construction phase even start. Like we're just not developing a property and be like, oh, I hope this thing gets, you know, meets my ARV. No, like that's all work, you know, in the development of this project.
Yeah, and so we'll end with these two questions. One is how much do you have left to raise? So far, we've actually raised through the GameVest platform and our investments personally, we're at 1,005,500 right now. Okay, so we're about 37% of the way there already. So again, what you're seeing on buytheblock.com is not the full raise. That's only 1,070,000 of the raise. The other 1,680,000 is actually coming through friends and family and accredited investors. Okay, so we are already over the million mark and already 37% of the way there. The last question I want to address is Elise's question, which is how do we know our money is guaranteed? There is no guarantee, y'all. I'm going to be 100%. I'm going to repeat that 2 more times. There is no guarantee. There is no guarantee. Did you invest in Apple and they guarantee that you were going to get a certain return? In this space, you do not get guarantees. There are risks involved, but we are doing everything possible. One, we have skin in the game. We have our own money in the game. And we are also investing in tangible assets. Okay, we're investing in real estate that we got at a very low cost basis. Armageddon, worst case scenario, we have to liquidate the properties that we bought at a low cost basis and we pay everybody back and we're all back to square one, zero. That's worst case scenario, okay? But and beyond that?
I mean, that's, you know, that's the, you know, the great thing about, I mean, for us, why it's also, I guess, great important for us to get in and buy these properties at below market value. And, you know, to have some equity, you know, when we're buying these properties, you know what I mean? And we did, you know, most of the properties, I think the cost basis was ideal. And, you know, I think some people, I've saw some questions about just understanding. I did, you know, initial Kimball Properties Fund that was primarily my friends and family this year and a lot of my colleagues. Julian actually in his group invested $517,000 in my initial fund. That's why it made sense for us to come together on this crowd fund and the secondary fund we did together. So, you know, that's the difference in the initial Kimball Properties Fund I got versus the crowd fund and the Buy Back the Baton Rouge Fund. The Kimball Properties Fund was, even though these have the same return, this was primarily my connections, and with Julian bringing so much in as a partner to be able to use his connections more in his relationship, it made sense for us to bring him on and do separate funds with him as a general partner. So that is the reason why we have a couple of different funds.
Yep. So, you know, we have how many questions? We got over.
I think 179.
We got 179 questions, y'all. We're not gonna be able to get to them all. If you got to email me, I'll be answering emails for the next 2 weeks, and I will do what I got to do to make sure.
Well, I think it will probably make sense. We'll have those questions. What we'll do is go through those questions, and if we feel like there's anything in those questions that's not answered by the FAQ or something that's really important, you know, we'll just add those questions to the FAQ. But I probably have a feeling that most of those, you know, will be in the FAQ. I saw one, how do you get in the Facebook group? So some of these other things that we might not have on the FAQ, we'll go through these questions and make sure they're answered. But I definitely would tell everyone to watch the tour video that really walks you through a lot of the properties that we're looking at, a part of this this fund and other stuff we're doing in the area. So you have a clear understanding of, like, you know, what we're thinking, you know, with this plan. And also, you know, understand that, you know, with this plan, some things are going to change. I tell people we're looking at this mid-city area, Eddie Robinson Historic District. You know, we're talking about, I would say we're in the second inning of a 9-inning baseball game. So, you know, there's going to be some adapting. There's going to be some changes. You know, and I think that's the fun thing, you know, that I look forward to in a learning experience and meeting people and seeing, you know, what that next generation of, you know, kids that come out of this neighborhood and what they're doing and stuff like that. Very excited about that part of it.
Yeah, so I just want to thank you all for being here. I've raised money before for a business that I had coming out of business school, and I don't take I don't take your hard work and your the sweat that you put in to earn the economic capital that you have lightly. I understand money in a very high way, and I know that it needs to work. And I believe in this vehicle that we created here to not only get you more income, but to get assets in your portfolio and to create impact at the very same time. When I look at the map of the United States from a bird's eye view, honestly, I don't see any other. I see other places, but this specific place, Baton Rouge, was the perfect fit for what we are seeking to execute. And so I'm so grateful to be here, 70 minutes away in New Orleans, have met Anthony literally 9 months ago. This has been like a baby in a womb unfolding. And here we are able to now present ourselves to the world through this webinar and through the By the Block crowdfund. So I just want to thank each and every one of you for being here tonight. We support you, and we are committed to your growth and development. Whether you join us as an investment partner or not, we still encourage you to join us at howtobuytheblock.com and be a part of our Facebook group and learn. I'm typing it in right now, howtobuytheblock.com. That's where you get access to our Facebook group. This is where we post videos and content that are showing you what is actually occurring here every single day as we move these projects forward. Again, I appreciate you. I thank you. We value your time. We value your capital. And if you would give us the honor of being able to employ it for you at a higher level and capacity while you continue to do your thing, we would be honored to receive it and do that for you. So with that, we wish you the best. Join us in the Facebook group. Watch the tour video on buytheblock.com. Again, for those of you who do not have a pre-existing relationship and are investing less than $5,000, you're going to go to buytheblock.com. And for those of you who have a pre-existing relationship, multifamily movement members, people who have our phone numbers, etc., you will invest through GainVest. So with that, we'll catch you later. All right.
Take care.
Much love, y'all. Peace.